we're high enough in the silver price for it to have very little upside resistance and to be able to just move some more. And it hasn't started yet, and that's got me scratching my head somewhat. I again think it will take place.
Now through Monday, April 7th, in honor of Silver Squeeze 2.0, for any Monster Box of Silver Eagles, we'll give you 2 additional Silver Eagles at no cost. And unlike some other Silver Squeeze deals, there's no limit. So if you purchase 1 Silver Eagle Monster Box, you get 502 Silver Eagles. If you purchase 10 Monster Boxes, you're getting a full tube of Eagles for no cost. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend, the Silver Guru, David Morgan. David, thank you so much for joining us today.
Elijah, it's always great to have a conversation. Thank you.
Well, it's great to have you today, and our viewers can find your work at themorganreport.com, also on YouTube and Twitter. We'll put the links in the description. I wanted to first talk about today's moves in the markets. We're continuing to see gold, reach new all-time highs, 3,080, I believe, or so, this morning, and we're seeing the stock market sell off amid, higher than expected inflation. What do you make of this move today, and also kind of the moves in the last few months of really just gold roaring higher starting 2025?
Well, I put out an update for the premium service, our paid subscribers, and it was a view of gold as the constant. And what it showed was the S&P 500. And it showed the stock market be, by that metric, the S&P 500, peaking around the year 2000. And it was a massive head and shoulders formation over, a couple decade and a half or so. And what it indicated to me is that the asset allocation is starting to shift. Mike Maloney refers to it as wealth cycles. If you timed it, you wouldn't have to time it perfectly, but it takes timing where you sell your gold, let's say in 1980, you sell your gold at the top where the gold Dow ratio was 1-to-1. You invest all that money in the stock market and you ride the stock market from that 850, 873, whatever was low, all the way up to, X. And then at that point, you sell your stocks and you buy gold and you ride it, or you can use real estate or whatever. So the point I'm making is when there's a massive reallocation of capital where most of it's invested in equities and that moves into, let's say, commodities, that shift usually is years in length. And I think that we may be starting that. Remember, I'm sure I said it on your show, Liberty and Finance, probably, I'm going to guess maybe as far as 2 years ago. And I said the run to gold had started. And what I meant was in those markets, and there's a curve that's theoretical and also empirical, but it's the idealized curve, I should say. It shows like how markets operate. And there's a stealth phase where the early money comes in and accumulates, doesn't really move the price. No one's interested in that particular market. And then once the accumulation phase is over, it starts to be marked up. And that's where maybe some more smart money comes in. So the point I'm making is that central banks have been buying gold like crazy over the last couple of years. And now most people that are involved in the gold and silver markets are aware of that. And now this markup is starting to happen. And at the same time, where I'm forecasting, you're going to see a rollover in the equity markets. And that will force some people, and some people will be ahead of the curve, moving out of that element into commodities with the money metals being the lead, or at least gold being the lead. So that's how I see it. That's the big picture. That's the one to pay attention to, because if I'm correct, then this last phase of the gold market, which we entered once we broke around 3,000 or so, could have, a few years left, and it could be very dramatic. Usually the last leg up of any market, real estate, stock market, commodities, is the biggest gain percentage-wise, usually in a short amount of time, relatively short amount of time. So we'll see.
It does seem like the stock market could be topping out at this point. The structure on a technical level looks pretty concerning there. Now, when it comes to the retail public coming in, we haven't seen a huge surge of demand or anything recently. I mean, I think things have picked up slightly. We're seeing premiums starting to increase again, but nothing dramatic. We do have, a group online talking about Silver Squeeze 2.0, I believe, scheduled for Monday. What is your perspective on this? And do you see this possibly having any impact on kind of this, the big cycle that you're talking about, where it's kind of the beginning stage of maybe the retail market or the retail public moving in now?
The retail market's really very, very almost dead at this point for both gold and silver, particularly silver. I talked to talking to one major dealer, wholesaler doesn't mean that I've talked to them all, but I've talked to a few. And gold, for example, at the wholesale, I mean, Kruger ran for like $5 or $10 over spot. I mean, it's ridiculously cheap, just because they rather get the cash and not have to carry the loan that they're required to get from the bank to carry the inventory. Anyway, back on point, Elijah. I think Silver Squeeze 1.0 was pretty successful. It moved the market, started to make a lot of ripples in the market. A lot of people on X were talking about it. And then Roth and Benham came out and said, you need to tamp down the silver market, and then things kind of subsided. This time, my take, Monday will tell, I don't think there's going to be much to it. Could be, might be surprised, but a lot of retail is either selling back or sitting on their hands. They either think that, $34 silver is too expensive, or they bought it at $25 with a high premium, a year or two ago, and now they're seeing, well, okay, I got a $4 profit. I don't think it's going any higher. I'm going to sell, whatever. Can't read everyone's minds, but I know what the market's doing. Very little on the retail side. On the other hand, banks just keep buying, gold particularly. Even Russia announced a couple of months ago, they're buying silver for a strategic asset. I don't think they use that word, but they're buying the other metals. They're buying platinum, palladium, and silver. So there is a market for it. And it's unusual to see, strength in these metals prices without retail participation. And what usually happens is that there's my moment. Oh my, look, gold's really going. I don't have any. I'm going to have to buy some. Or I sold the house. I don't know where to put the money. I'll buy gold, or that type of thing. So I think we will see a re-entry into the markets, the precious metals markets, via the retail side. But I think it's going to take some type of shift in thinking. I think the people that are in it are more or less burnt out, or just holding on to their gains, waiting to see how high it'll go. And we need a new input into the market, which I just outlined here will be. Because a lot of these stock investors that made big profits or are starting to lose now got in late and say, you know what, the gold keeps moving up. They're going to go, well, you know what, I know what's moving up. Gold is. So it will come back. I just don't know when.
What are the signs that people should be looking out for a big move on the retail side? Because as you mentioned, not a whole lot of demand recently. And I guess that is a good sign for people looking to buy. Premiums are still pretty low. But what are the signs that you're maybe looking out for that shift to come?
Volume. I just need to see, volume in the market. That when I talk to these wholesalers, they're saying, we're seeing things are picking up. People are starting to buy. People are moving IRAs out of, maybe they had a real estate investment trust in their IRA and they sold that, and now they want to move into gold. That type of thing. But to the best of my ability, speaking today with you, Elijah, it hasn't happened, or it's not started. It's not started significantly enough to be able to measure it.
Definitely. No, when it comes to what is happening in the economy, you've talked about, fears of recession coming. We do see the stock market seemingly topping out, as you mentioned. What is your take on the economy moving forward here?
Some more stagflation, I think. I don't think the tariffs are really a great idea. Some do, I don't. I think that, there's going to be a deterioration in global economy. I've said for the last couple of years, we've seen more or less a contraction in the global economy. And I think that will be the main trend. Within that trend, you may see a rebuild in the United States because of tariffs and bringing industry and manufacturing back into the United States because it makes more sense and it will revitalize, the United States internally. I think that's true, but I don't think it's to the level that maybe the administration anticipates. I just heard a great lecture. I forget the number, but it's something like, I forget, it was 1,500 industries had moved east, but they only expected like 10 or 20% would come back. I don't know where they got those numbers, but I go along with that idea. I don't have any idea if the numbers are correct, but the idea is that, I don't think Apple Computer is going to bring everything back to the United States. You just have too much time, effort, and too good a well-trained labor force to manufacture what they do in China, and then final assembly wherever they do it. So that's how I see it. And if you look again at one more thing, and I put this out 3 or 4 times in the last couple of years on Twitter, you look at the amount of retail closures in the United States, not only like chain restaurants like Applebee's, and then the bed and breakfast or Bed Bath and Beyond, and all kinds of even stalwarts like Nordstrom's and Macy's. The amount of contraction in retail across the board, be it bathware, be it clothing, restaurants, it's huge. And you just don't come back from that kind of a trend by bringing back, businesses that do better by manufacturing or producing in the United States. It'll help, but I think it's not going to be measurable from the big picture. In other words, whatever happens 2 years from now will not be where the United States was at peak production.
When it comes to the trade wars and the tariffs, as you mentioned, you don't think that's the right approach. Can we get your perspective on this? Because I think there's a lot of concern out there, right, that this is going to cause more inflation. We did see inflation numbers higher than expected on the official inflation numbers. If you want to trust them, it's still higher than they were expecting there. So your take on all of that, do you think these will just cause inflation to get worse?
Well, it'll be perceived that way. I mean, whatever tariffs are enacted and actually come to fruition, they'll be passed on to consumers. So if I'm an importer of glassware and I got a 25% tariff, then when I do a stained glass job for a church, I'm just going to factor that into the cost of doing business. And the customer's going to have to pay for it. And they'll see that as inflation, that the price went up. Well, it really came from a tariff, but all they see is an increase in price of 25%, and they'll call it inflation. So it doesn't help. There's some maybe rare cases you can make that point, but being, pretty much geared to the Austrian school. I mean, I'm not 100%. I think there's flaws in all these systems. I think the Austrian system is the most fair and objective as far as telling the truth about how an economy really works. But, if you say, okay, David, what do you want? I say, well, I want a free market. But what's a free market these days? If you look at the Chinese building these electric cars cheaper than anybody else, but why? Well, one is they're very efficient, but another reason is they're subsidized. So if you're subsidized, that's kind of an anti-tariff. So now if they're able to put out a product for, make a ridiculous number, $15,000 for a brand new EV, and Tesla can only do it for $40,000. Who was subsidized the most? Tesla was subsidized because of the green energy credits. China was subsidized by the government. So what's the true free market price? It's hard to determine. But if you were able to determine that would be the fairest for everybody, because the idea of free market capitalism is that if you make a better X than I do, then you're going to win in the marketplace because it's a superior product. It costs less, it lasts longer, and people like it more. But those days are pretty much gone with planned obsolescence, subsidies, as I mentioned, tariffs, etc. So it's a tough one for me to say, other than from an intellectual exercise, what works, because in the real world, none of that's really taking place.
Definitely. And I guess if we look forward here with respect to the tariffs, I mean, a lot of people are considering this will cause inflation, but I guess it's kind of an interesting situation because the mainstream media, obviously, that's against the current administration is talking about how it's just a silly idea. These are a lot of these countries are allies, like Canada, right, to the U.S. Why are we engaging in this trade war? And precious metals definitely like geopolitical conflict. So how do you see this? Do you even think this is any of this makes any sense, given that it's tariffs against friendly nations largely, or your perspective on that?
Usually the government that governs least governs best. I mean, we do need some regulations and some ground rules and some objectives, but I think that the more convoluted it gets, the more it gets wrapped around the axle, it becomes more and more cumbersome. So, for example, I talked to some Canadian friends yesterday, and the last couple liquor stores he went into, the proprietors have removed all the United States-based liquor. It's all Canadian whiskey. There's no U.S. whiskey and whatever else. So it gets to be, I call it a trade war for a reason. And so this really doesn't help. There are ways to make it better. And the whole thing is, have we really implemented these tariffs? And the answer is, well, it's been kind of wishy-washy so far. And is it going to be, aluminum and steel, and it's not going to be the precious metals? We really don't know. It really hasn't been well defined. And then if something is manufactured in the United States, final assembly takes place in Europe, and then it's imported in the United States, do you have to pay a tariff on that? I mean, it's going to get, I think, very interesting going forward to see what really happens and what the blowback and the unintended consequences that come to the fore will be, and what the administration may be backpedaling, let's say 6 months from now, Elijah, say, well, wait a minute, we didn't mean for this to occur, therefore this tariff is going to be, reduced, or won't happen, or whatever. I like a level playing field, but as I just mentioned previously, those are almost impossible in today's world.
I think a hope of that a lot of people had regarding this new administration is, you look back at Trump's first term, there was no new wars started in his first term. His second term, the promise of peace, I think a lot of people had a hope for. Do you think that's the direction we're going? I mean, it doesn't seem like there's a whole lot of action in that part, and even the tariffs maybe making things a bit more, creating more conflicts. Your perspective with respect to that and how it could impact the gold price going forward?
Well, a couple old adages come to mind. One is that when goods don't, trade, when goods don't move across borders, troops will. And that's an old adage. Another one is, I think, unfortunately, that what you outlined was just really good in the first administration. One of the things I could say positively. There are others, but no war. I mean, that would be, top of my list personally. And this time, no. I think there's just too much momentum. Ukraine's running out of soldiers. Now we're getting noises that maybe the UK will start, putting men in there. Maybe some other NATO nations will do it. Really, this thing should end. But is that going to happen? It doesn't look like it. And the Middle East, of course, with Iran and what's going on there, unfortunately, the way I see it is it's going to escalate. It's not going to get better.
And for those looking at the precious metal markets, it's a saying that, gold reacts to geopolitical conflicts. It seems like gold reacts to geopolitical conflicts. So it seems like in this situation, while we, pray for peace, it doesn't seem like, it seems like that this will be positive for gold going forward.
It will be. Yeah. Gold hates uncertainty, and the world's becoming more uncertain as we speak. So it'll continue higher. It should.
Definitely. And before we let you go, I mean, kind of highlighting again this movement that, as you mentioned, the first time was pretty successful at moving the silver price. Silver squeezed 2.0. Any last thoughts with regard to that? And looking into, I know 2025, it seems like we've had consecutive years, right, of silver deficit. So it seems like the bullish case for silver is really more bullish than ever. But your take, I guess, on silver going forward?
Well, I think it's going to go higher. I think it will catch up with gold eventually. Silver squeeze 2.0, I'm calling it. I don't know. There was one on X. I can't find it. But some gentleman, I guess he's a tech entrepreneur, made a pretty big physical purchase. And it was on my feed on Twitter this morning, or X, however you say it, which is one big slug, but it's not enough to move a market. But I don't know. I think we have some waiting for the retail market, as I said earlier.
And as for a technical level, do you see any technical resistance being broken right now? I know we're almost to 35, which is very encouraging. What is your next level that you're looking for to break in regard to kind of a technical analysis?
Yeah, no, on a technical basis, we're basically free. I mean, we're high enough in the silver price for it to have very little upside resistance and be able to just move some more. And it hasn't started yet, and that's got me scratching my head somewhat. I again think it will take place, and it may come out of the blue. Maybe waiting for the tariff thing to, assert what's the real truth. If you're a Canadian company, you mine in Mexico, the silver comes across the border. Is it, tax it or tariffed at 25%? Probably. I don't know, but no one knows for sure. That's the problem. We really haven't had a great definition. And then, they put the tariff on and then they take it off. So again, quite wishy-washy at this point.
Definitely. And again, to your point of how the big money seems to have moved, right? Central banks buying gold. And we've also been seeing, outflows from London to the US, outflows from COMEX. So it seems like there's a lot of movement with respect to the big money and the big investors, but the retail public really hasn't woken up yet. So I think this is kind of maybe a red alert for our viewers of like, hey, the big money is moving at the moment.
Yeah, that's a signal. And the retail will come back. It's just when. And I think it's what I said earlier, when if they get tired of losses in the stock market, or maybe, I'm starting to lose some of my gains, I think I'm going to shift. People look for what's moving. And the gold market's really gotten a lot of news in the mainstream press over the last few months. New high, new high, new high. And so this will start to creep into the consciousness of the average investor that's never thought about gold before. And they will come into the market.
All right. Well, David, really appreciate your time today. As always, if our viewers are interested in learning more, it's themorganreport.com, a silver guru on YouTube and Twitter. We'll put links in the description there. Tell us a bit about that.
Great. Yeah, I'm finishing up the documentary, silversunrise.tv, and I am continuing to post on Twitter almost daily, work on the monthly reports, get some great interviews, and I'm very happy and passionate about what I do.
Fantastic. Well, we always appreciate your time, David. Thank you so much, and God bless.
Now through Monday, April 7th, in honor of Silver Squeeze 2.0, for any monster box of Silver Eagles, we'll give you 2 additional Silver Eagles at no cost. And unlike some other Silver Squeeze deals, there's no limit. So if you purchase 1 Silver Eagle monster box, you get 502 Silver Eagles. If you purchase 10 monster boxes, you're getting a full tube of Eagles for no cost. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.